Hi everyone, welcome back to Joel Income Journal. This is where I document my real journey as a Singapore investor working towards a US $5,000 a month in passive income by 2026, which is next year. Every week I show you my actual portfolio numbers, my dividend income, my wins and also my losses. Total transparency. Now before I begin, just a reminder that I'm not a financial advisor. Everything I share here is for educational and entertainment purpose only. Please do your own research and make sure any decision you make fits your risk tolerance. Alright, let's get into it. Let's jump into week 2 of November. Here's my latest snapshot from Snowball Analytics. My portfolio value is now at $136,542. I have a net loss of negative $15,257. That is about 10%. My internal rate of return is negative 15.39%, and my projected annual passive income is now at around $32,389. So yes, the portfolio is down this week. Let's see what the news say. We'll go to Yahoo Finance news site. Well, this week was a typical choppy week for the markets. According to reporting from Yahoo Finance, the major indices closed mixed. The Dow ended slightly green, while the S&P 500 and Nasdaq finished in the red. The main reason? Investors are once again uncertain about the Federal Reserve's interest rate path. Earlier in the month, inflation numbers came in softer and the markets got excited, thinking rate cuts might come sooner. But this week, economic data actually came in stronger, and that shifted the narrative again. Because when the economy is too strong, the Fed tends to keep interest rates higher for longer to prevent overheating. So now we are stuck in this tug of war. One moment, people expect cuts. The next moment, data suggests otherwise. And when investors don't get a clear direction, you get this kind of sideways market, slightly red, slightly green, and full of hesitation. Now I want to take a moment to encourage all the investors watching this. I've been investing for more than 10 years, and I can tell you honestly, weeks like this are totally normal. In fact, the market is always looking for a reason to go red. If not inflation, then interest rates. If not the Fed, then geopolitics. If not geopolitics, then earnings. There's always something. So instead of reacting emotionally, I focus on building systems. Systems that pay me even when the market isn't going my way. And I want to highlight this again. Don't be over leveraged. When markets turn red, the people who get hurt the most are the ones who borrowed too aggressively. This is why I keep my margin extremely conservative, and I prepare dry powder such as S-Gulf. Red days are not something I fear, they are opportunities. So don't stress if your portfolio is slightly down this week. Mine is too. It's all part of the journey. You don't get wealthy by avoiding red days. You get wealthy by surviving them. Alright, with that said, let's go to the week 2 dividend income. As you can see from Snowball Analytics, this is my week 2 income. Alright, but let me show you from PowerPoint slides, and so it's easier to see. Here is what I received this week. From MSTY, I received $8.96. From NVYY, I received $12.23. From PLTW, I received $79.24. From TSLW, $43.82. From Chippy, I received $35.94. From LT, I received $131.46. From WPay, I received $12. From YETH, I received $14.94. From YMAC, I received $56. From YMAX, $18. From HOOY, I received $12.89. From IWMY, $5.77. From MSTY, $41.39. From QDTE, $61.50. TLSLY, $22.47. XDTE, $3.49. So total for this week is about $560. It's slightly less than last week, but it's still pretty solid for this week. Now moving on, I also want to update that I have added 30 shares of WPay at $51, QQQI 30 shares at $53.70, PLTW 30 shares at $39.90. Okay, so why WPay? WPay is Roundhill's weekly pay income ETF. Alright, these are the facts from Roundhill. It is designed to generate weekly income. It holds the entire portfolio of Roundhill's weekly pay single stock ETFs, and that includes Amazon, Apple, Microsoft, Nvidia, Meta, Google, Tesla, AMD, etc. Every holding is kept equal weighted. It's rebalanced monthly. So why I added it is because it gives me diversified weekly income, lower volatility compared to holding individual single stock weekly ETFs. It's perfect for my income flywheel, and I want WPay to become a core steady weekly income position over time. Next, why I added QQQI? It's the newest Nasdaq 100 high income ETF. Alright, it holds the actual Nasdaq 100 stocks, not derivatives. It uses a tech-efficient options overlay to generate income. The strategy is an enhanced income approach, not a pure covered call. The goal is to provide high monthly distributions plus participation in market upside. NEOS is also known for focusing on tax-efficient income ETFs. So why I bought QQQI is because it gives me Nasdaq 100 exposure without capping all my upside. It provides consistent income without being as aggressive as single stock UMAX ETFs. It's a good diversification, so my stock is not 100% UMAX style strategies. It's a long-term complementary piece in my income ecosystem. Next, PLTW is Roundhill's Palantir Weekly Pay ETF, which is a single stock ETF using Palantir options. It distributes weekly income. It targets high income by selling covered calls or other derivative strategies on Palantir. It tracks the performance of Palantir while generating cash flow. So why I added more PLTW is because Palantir has strong business momentum. PLTW's weekly distributions have been very consistent, and this is one of my better performing weekly payers. Alright, so that's my full update for week 2 of November. The portfolio is slightly down, but that's completely normal for a choppy week like this. Nothing unusual, nothing alarming, just typical market behavior when sentiment is shifting. The good news is that despite the red days, I still receive about $560 in weekly income, which is the whole point of building this income-focused strategy. The cash flow keeps coming in regardless of whether the market is green or red. This week, I also added 3 new positions, WPay, QQQI, and PLTW. All small deliberate buys during the dip, and all align with my long-term income flywheel approach. As always, I'm staying calm, staying disciplined, and keeping my leverage safely under control. No rushing, no aggressive moves, just steady progress. If you enjoy following this transparent journey, please give this video a like and subscribe to the channel. It really helps me grow, and it motivates me to keep sharing honestly with all of you. And one more thing, I might make some slight adjustment to my strategy in the coming weeks. I'm still reviewing a few ideas, so stay tuned for that. Alright, thanks for watching, and I'll see you in the next video. Bye!